Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, September the 27th, 2010, and it's time to look at the markets. Okay, last Friday we went in depth into the Dow Jones Industrial Average, showing you we are in a clearly defined downtrend, a bearish trend, not a bull market any way, shape, or form. That this bounce we're seeing is nothing more than a counter trend bounce. And we told you that they'd actually have to make a brand new high, taking out the previous high before the flash crash, before they could even come back in and say, maybe the bulls are back. So they've got to do all that work, okay? And ultimately, well, they can't. It's just not going to happen. I'm going to show you today why I know that. First off, right after I did that video on Friday, we got a lot of people saying, hey, we're going to take out new highs, and then you will see the bulls are stronger than you think. Okay, look, trading is like playing a game of chess. You want to look further ahead than one move. Ask yourself, if we actually got the breakout, what then would we do? What then would the chart look like? All right, let's look at this right quick. First off, we're looking at the NASDAQ today. We're going to go in depth here. This is where you were before. You had an uptrend going back to March '09. You broke through that right there. All right, you notice an increase of sell pressure right there, and down she comes, okay? He hits a low of 2100, all right, 2100, then she rallies. Now note this rally. In hindsight, you can all see it, but remember, we were saying the same thing back here that we're saying right now. Here you have this major rally on low volume comparative to the sell volume. Here you had lots of gaps in the pattern. Not going to be a good sign ever. Low volume gaps mean they're going to get a fill. You're going to get a pullback to fill that. So the higher they went, the more we decided that, hey, you need to be a bear here. And once you broke out, we got a lot of people thinking, hey, we had a new high. This is a great point to be. And we told you you didn't even have to trade this at all. You could just sit back and ignore it because all this move would be erased. Why do we know that? Because all of this was going to get filled. It was on low volume. And these are telltale signs that breakouts will fail. So here we are again. Let's go back over here. Remember, you went from 21 to 25, okay? Overextended, no consolidation time period, tons of nasty signs that this is going to fail. Here you are again. This time, you're not at 21. You're at 2099, okay? You couldn't do it from 21 on the volume you had here, up here. Now you think you're going to make this move up here and break out? Analyze it. You're lower than you were, and you're wanting to go higher than you did. You're doing it on less volume than you had before. The gap's bigger this time, and there's more of them. Instead of being 4 or 5, you've got 7 or 8, and they're huge. All right? You are not going to win this. I don't care how you look at it. You're going to lose. The difference is, how do you lose? You have a couple of choices. You could still run up here to the high point. You could even break out. I'm not going to argue you can't. I'm saying you can't sustain it. That's my main point, okay? That means you can either move up here to the upside, and I'll short you on the way up, and then you can roll back over. I'm going to win. You're going to take all this out. You're going to form what's known as a double top. Don't worry if you don't know what that is. I posted a video on our free website at perfectstockalert.com this weekend. You can go watch the video there under our chart school, and you can see what it looks like, and it looks just like this. That's right, just like that. All right, so you can either run it there and get that double top and then fail. All right, I'll make money, and I won't really care. Or you can reverse now. Let me show you what that looks like. If you reverse now, well, wrong tool, okay, and you start coming down here to fill all these gaps, all right, and then try to reverse back to the upside, you could do that too. The problem is the timing. The timing puts you in the third quarter earnings, which is going to come out, and everybody expects third quarter and fourth quarter to be worse than the first and second, so you're not going to have a lot of bullish news coming out. You're going to have a lot of companies that are starting to underperform. People are going to start thinking about fourth quarter. They're going to say, wait a minute, man, third quarter is actually showing what we expected, therefore fourth quarter is going to be worse, and then they'll start driving lower. Either way, you're in a big mess if you're a bull, and if you're a bear, you can't go wrong. You just got to be patient. Very simple, very easy. Okay, before we wrap this video up, I need to take a moment to thank every one of our subscribers and every one of our users. Thank you very much for supporting this free service. About 5.5 months ago, we set out to make a free service on YouTube, and we had I think it was like 150, something like that, subscribers on our YouTube channel. And this weekend, we crossed over 3,000 users. So thank you very much for that show of support. We appreciate that. It helps us stay free, and that means a lot to us. So thank you very much for that. Not bad for 5.5 months of work, huh? Okay, for those of you who have not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, you can pre-register for our swing trading course for October. It starts in about a week, and anyone who pre-registers for that course gets the rest of this month absolutely free. You can check that out on our free website. Also, go check out that video on the double top. You need to check that out. Also, we've got one out there on the rising wedge pattern, which is a very bearish pattern, and we're seeing that on a lot of charts right now, so it's things you definitely want to be paying attention to, and it's all free on our free website. Okay, cool. A quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care. I hope to see you all in our live course tomorrow morning.